We have a perfect solution for the Eurozone. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Tuesday, the 28th of February. Apple trades at new highs as rumors are rampant that over the iPad 3 coming out are being announced on March 7th. So we'll see how that works. But is Apple reaching a zenith? We'll look at that stock in just a moment. We also have the perfect solution for the Eurozone. Greece gets out. Or I should say Greece stays in and Germany gets out. That's our solution. I think it'd be a better solution for Germany. But three stocks are on the move today: Priceline.com, TRIPADVISORS, and Staples. We'll look at all these markets in just a moment using our trade triangle technology. But first, let's take a look at Apple. Here we have Apple trading at 533.74. Our original buy point, our last major buy point, is 355. So you can see we've got some serious profits in this position. Last signal on the weekly was 393. So you can see there's the weekly signal right there, 393.62. And this is the power of the triangles. We don't know how high Apple's going to go. One interesting thing to look at, and I'm going to put my telestrator on here just to share with you what potentially I think could happen. Next, if you look at the highs right here, in the low right here, you're talking about $40. This is the difference between the highs and the lows. Okay, $40 from here to here. So if we added 40 to 526, that would take us up to 566. March 7th is when they're going to introduce the iPad, and I would not be surprised if this level here, 566 to maybe 580, is really going to be maybe a top in Apple. Would I sell it? No. Would I wait for some confirmation? Yes. But right now, the trend is your friend. Everything points like it wants to go higher, so there's no reason to try to pick tops. That's a loser's proposition in the market. Everyone keeps moving their stocks, their objectives, trade objectives higher, higher, higher. It was 500, now it's 600, now it's going to be 700. And they do this all the time, and then eventually the market just collapses under its own weight. But Apple's obviously a juggernaut. You can see the very strong trend here, and that hasn't changed. But look at these levels, 566 to 580 sometime in the next week, and let's see how that plays out. Let's clear the screen and go to our next market, which is going to be, go to our portfolio manager. We're going to look at the S&P 500, which again is like a juggernaut, keeps trending up. You can see with our 3-month chart, you can see with our parabolic, which is the PSAR right here, just below plus 100, still a strong trend, 1370. You can see we got long right here at 1292. I still think this market's going to go higher. I don't think a lot of people are even in this market right now, and that's the problem. And they're watching it. Eventually they'll say, oh my gosh, I've got to get in, and that's going to push the market higher. So looking at our next market, which is going to be the Dow. Dow is also plus 100. Very strong trends in the equity markets. And the question is, where else are you going to put your money? But we'll be talking about that in just a moment. So there's a chart, and let's just go to chart right here. And you can see on the Dow, again, the same thing. We had a buy signal right here at 12,284. We're trading at 13,000 right now. Almost over 700 points profit in this position right now. It looks like it wants to continue to go higher with a strong upward trend. So let's go to our next market. And in fact, we're going to look at the NASDAQ. The NASDAQ is pretty much the same. Rather than look at that, let's look at something really interesting. That's silver today. Silver exploded to the upside. And if you don't believe in technical analysis, this is going to prove to you exactly the power of technical analysis. So let's scope this out just a little bit further. And I'm going to take off the weekly and monthly trade triangles. I'm also going to take off the Donchian trade channels, which you can do quite easily, and the parabolic. So just get a very simple chart. Taking our trend line tool, add a trend line tool, you click here, gives you the little yellow box here, meaning you can go from the highs here, drag this down, and boom, you see how it exploded over this trend line today? We talked about this yesterday, and we've talked about this all week in silver. This is a major, major trend line. Once it was broken, boom, that's the power of trend lines, and it's a very simple tool you can use on any chart. And the longer the trend line, the more powerful it is. And this goes all the way back to April 25th of last year. So again, it's a long-term trend line, and once you see that reversal, and what you need in a trend line, hold on just one second. what you need in a trend line, and let me put my telestrator on so you'll see this, is you really need to have 3 points. And obviously you've got them right here, 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 and to a lesser extent right here. But that was a major, major breakout. So that's, silver is on its way. And also you've got a situation where you have your trade triangles are all positive. So you got the breakout, you got the trade triangles. Looks like silver is going to go higher, in my opinion. How high can this market go? Well, just on a simple technical analysis, if we just, let me get my telestrator back on here, and we'll do this. So if we're in a simple technical analysis, if we just look at this move right here, this is a pretty nice little energy field. So we take from the lows, I'm going to say 20, we'll just be very conservative, let's say 28 to 34. That's a total of 6. I think we're looking at 40 as a target zone, and then 44 is a little more aggressive. So 44 also dovetails very nicely with those highs. So that would be a 44 for target zone there and 40 here. So I think that's what you're looking at in terms of the area where this market's going to trade. So very strong close. Looks really, really good to us. So let's clear the screen off and look at our next market, and that's going to be gold. Gold is not faring quite so well. It just doesn't have the same dynamic right now as silver. You can see we are plus 70, and that just doesn't have the same dynamic. It did break over the trend line, of course, if you put the trend line in right here. See how the 3 points, right? 1, 2, 3, breakout. Again, look at the pattern. I mean, it's incredibly similar if you think about it. Let me just draw this on the screen so you get the same picture. So here we have 1 point, 2 point, 3 points. The breakout, see the big blue line up? That was the breakout, and that shows you how we just basically went up from there. And but the big resistance area here on gold is 1800. That's the big resistance line. That's right here, 1800. So that's, if we close over that area, then we're going to go see this market do much, much better, in my opinion. So let's see how this plays out. But we have a negative long-term monthly trade triangle, which is holding this market back, and it's not exploding like silver. It's exploding, in my opinion. So let's clear the screen and go to our next market. And the next market we're looking at is going to be, we can look at copper. Copper's still pretty good, and we're still bullish on that. Let's look at crude oil, because this is really where we really want to focus our thoughts on actions in right here. Again, we have a very powerful breakout right here. And let me just put my telestrator on so I get this right. And again, we've got a really nice, we've talked about this before, this really nice energy field, which we've talked about right here. This is the left shoulder. This is the head. This is the right shoulder. And this is the breakout right here. So this market is capable of going to the 120 to 125 area, in my opinion. Now, that's not to mention what may happen in the Middle East. That's a whole wild card, but nonetheless, technically, this market's looking very, very strong. The next level of major resistance is going to be the psychological 110 level, where it basically stopped before. I think after we regroup here, I think maybe tomorrow, maybe a low day in this market, I think we'll blow through the 110 level. So we're looking at, let me just write this down. So possibly Wednesday, that's tomorrow, is a low day for crude oil. Possible. Let's just write that possible so no one gets carried away. Possible low day tomorrow, Wednesday, for crude oil. So let's see how that plays out. Nonetheless, the markets are looking very strong. We still like the pattern in this market. We think it can go much, much higher. So let's just clear the screen and let's go to our next market. And that's going to be, Well, because the USO is pretty much the ETF is hanging in there very closely. It's doing, I think, very, very well, and it's tracking very well indeed. Plus 90, same pattern. You can see this pattern just really is identical practically to the pattern that we saw on the crude oil, and there's the breakout right there. So we're looking for this market to obviously go higher. So we like the way this market's stepping up. I think we have our target zones around 44 on here. I still would stay to that same premise. So let's clear the screen, go to our next market, and the next market we're going to be looking at is going to be, well, the euro, the forex. That's the euro continues to go higher. It's still trading at 134.64. It defies a lot of people who are bearish on this market. I think you've got to be very, very careful because you've got some power under this market. It should, in my opinion, not have gone past this point here. Let me explain to you what I mean by that. Previous lows tend to become previous resistance, and what we've seen here is the fact, here's the low, and you can see how it sort of stopped the market the first time, turned back down, which would be a normal technical pattern. The fact it came back through the pattern is not a normal technical pattern. And you can straighten that up a little bit. The fact that it went through there is an indication in my mind that something else is afoot here. I don't know what it is, but the reality is this market is acting far better than anyone anticipated. And we have our intermediate term trends positive from 130.74, and the longer term still remains somewhat mixed. So we have an emerging trend, but it's not there yet. So I would say, in fact, if we put our, let me just put this on the screen, put the parabolics on there. I'm sure they're in a buy mode right now. Yep, there they are. So you can see the parabolic is really turning up to the upside. So let's clear the, well, let's just go to our next market. We don't have to clear the screen because we didn't do any writing. So here's the dollar index, much the same there. We're looking for the dollar index to find support, I think 77, 70, 85, something like that. It's the Fibonacci number, so you can just put that in, the Fibonacci number, go from the highs, drag it to the lows, and you can see 77.43, and let me put this in there so we get a better reading, but and let's get a little closer in. So you can see that we're really 77.41 with 78.30, so another one big move down would satisfy this. So let's see how that plays out, but that would be a perfect Fibonacci retracement, and normally Fibonacci retracements do support markets. So let's go to our next market. And we're going to look at the Reuters-Jeffries CRBA index. We're very excited and very bullish on this index because we think inflation is going to come. This index is telling us it is going to come. And you can see the close we had here. This is a close of 325.90, almost 326. It's broken this pattern. This is the previous high, so we've got a nice move up. And if we scope this out, let's say a little further, you can see we do have a long way to go on the upside from here. So you can see the monthlies don't kick in that often, but when they do, you've got to pay attention because look at the move here to here, and we find the move from here to here, and then if you look at the move from here to here. So let me just scope those in. I mean, these are remarkably big moves. So if you look at just this from a standpoint of moves, just go down to there, up to there, kind of flat there, but then up to there, then back down here. And I think now we're going to head up again. So again, these moves don't happen that often, but when they do, you really want to be very close. There's another big move right here. If we go back, you can see the move was down to that point right there, which is really, you quote every major move in inflation based and deflation based on this tool. So really pay close attention to it. So it looks like it to me it wants to go higher in my opinion. So let's go to our next market. And we're going to be looking at Priceline. Priceline.com, big winner today, up 7.23% plus 100. This is what I want to show you. Excellent earnings. We were in this market before it happened. Think about that just for a moment. Let me get closer in and make it this really simple. So closer in, you can see we got long this stock 553.33, and that was on, let me just take this off. and that was on February 13th of this month. Now, did we know that we're going to have blowout earnings? No, but the market was telling us that was in fact the case, and our trade triangles were doing the same thing. So we're long, loving life, great trade, long from 553, the market's 634, almost $80 profit in this position just in a matter of really 15 days. So 15 calendar days, not even that, maybe a couple of weeks in trading. So let's go to our next market. Next market's TripAdvisor. Now, TripAdvisor's minus 55, so we know what to expect there. Now, why is this 55? Longer term, we've got a bullish signal, but also weekly, we have a signal that says to get out. Now, even though it did have good earnings, the market is up on the day. You would have missed this move. However, it's the way to trade. You're trading the percentages. If this move is good, it's going to continue to go higher. We'll get long, and we'll still make money. Longer-term traders, of course, are still long this market from much. Let me just look back here. 1 second. So there you have it. So TripAdvisor hasn't been around that long in terms of our data, so it's still a minus 55, a trading range, but nonetheless, it looks to us like it wants to build to go higher. So let's go to our next market, and that's Staples. Staples is a plus 100 right here, up 4.13%. Again, a good move today. And let's clear this screen off. We've got a lot of data on there, so let's just take that off. And let's just take some of the trade triangles off because we've got a lot going on. And let's get close up. Basically, you can see we had a buy signal here at 15.55. The market's trading at 15.86. It's not unusual for a market to give a buy signal and then sort of languish for a while, then suddenly come alive. This is a big day today, big earnings day. The market's up almost 4% for the day and still looking good. So again, lots of stuff going on. But hey, you may, if you want to learn about this stuff and really become a better trader in 2012, you may want to give us a call and visit us for our Market Club Investor Summit that's taking place next month on the 27th and 30th, just outside of Salt Lake City. It's a toll-free number, 877-219-1482, extension 10234. Again, if you're coming from overseas, it's 1-801-341-3981, extension 10234. We'd love to hear from you. I'm going to be there talking about the trade triangles and how I use them and how you can use them too successfully. So I hope to see you there. I'm Adam Hewison for Market Club. I'll be back tomorrow, same time, same place, looking at some other stocks and other markets that are on the move. So have a great trading day.